So today we are going to look how to pass the Lucid trading accounts, the tips, tricks, and what's the best strategy to pass this account pretty quickly and easily. So first thing first, we need to choose an account. I prefer the Lucid Flex, the 50K account. I like this one because it's pretty flexible, and I think we have a good ratio between profit target and max loss limit. We have an end of day drawdown that of course I like. And the other thing that I really like is that in the funded phase, we have no consistency. So I think this is a bargain, because once you get funded, it's like if you have live account where you can take even big days with big profits without having problem with payouts. So I think this is really a great feature. So now let's see the account. And before I forget this, if you select the platform and go to rhythmic data or whatever kind you want, it's really not that important. But if you use the coupon code BESTOFFER, you will always have the best discount possible on every single account. In this case, we have the 40% applied. It's the best discount you can have right now. So this is my dashboard. I have Lucid Flex 50K evaluation, and you can see it's still active. It's still an evaluation account, but I had to make this video today because once I pass this account completely, this account will become a funded account, all right? And basically, when you pass the account in 5 to 30 minutes, they switch the account to a funded one, all right? So I have to make this video right now because I think that tomorrow or maybe in a couple of days, this account will be a funded one. So I would not be able to make this video. So let's see the details of this account. As you can see, the account balance, it's $52,351. The minimum balance is pretty healthy, and the total PNL generated it's 2,351 in 12 trading days with a consistency of 26%. As you can see, the equity line is pretty stable, and we need other $649 to pass it completely. So let's see on March. As you can see, we have 200 days, 100 days, 100 days, 59 day, 75 day. And on April, we have a 28 day, 600, 100, 300, 100 loss. This is the first loss I took, 400 and 300. So basically, I think I will pass this account between tomorrow and the other day. And as you can see, it's not rare that I have days with 600 or 400, 300. So this is the last day to record this video with my evaluation still available. So just to be sure, let's do a refresh. So everything is the same. And now let's move on the tips and the strategy that I use to pass evaluations. First thing first, we can look at some tips to pass the evaluations. One thing that I use a lot is the daily bag. I call it the daily bag. What is it? Let's say that the day is starting and we are trending up. So my first position is never full size one, never. Why is that? Because I try to enter here. Let's say I want to go long here. So the fact is that if I enter full size here and I take a loss, I'm out of the game, all right? So I tend to enter with half size. So my first position is always half size. And this is my little bag of money. Why is that? Because when I take my TP, I can enter again on this trend without risking my drawdown, all right? And this is very, very important because I can trade a lot And when I enter here, if I take a loss, it's a small one because I already have some profit from my first half size position, while the second one will be full. Okay, so if I go to TP here, my bag become bigger. Okay, so even here I can stop trading and I can have like a $200 day. Okay, and I can choose from here if I want to risk again and use again my full size, or if I can double my full size, right? Because in this way I can aim for a $600. Okay, this is why you see these small days and these big days. Okay, this is the reason, this is the strategy that I use, and it's pretty cool. This strategy come from a close friend of mine that worked in trading desks at banks, and I think this is very cool. Everybody do the opposite. So you see your trend and the first position is maybe here or everywhere but full size. All right, the problem with the full size position is that if you take the first stop, you are out of the game. All right, so your day basically is gone. And with prop firms, we have really small drawdown, so it's very important to create a little bag, a little pocket of money to use during the day, right? To not touch the drawdown that the prop firm is giving us. Okay, so this is the first thing. Now, another tip that I can give you is this one. So let's say we are still on this trend. You enter here, right? Let's say it's the second position, the third position, doesn't matter. But I tend to use pretty much always half size. Why is that? So this position here is half size. The market is going in my favor, but it's doing a little retracement. As soon as it turns again, here I add another half. So now I am full size, okay? But I have better position. So now when market goes, I have maybe my first target here, okay? I can close this contract, and my other TP here. Okay, so maybe my first TP is like 1 to 1 and my second TP is 1 to 2. Okay, in this way I can have a better risk reward. And if you are asking yourself if I'm a 1-to-1 guy, yes, I am. I think that 1-to-1 risk reward is the best. Everything you can take more than 1-to-1, it's just cream. Okay, it's just the best you can get, but you can still aim for 1-to-1 and be pretty good. The thing here, the thing that I think is very important is that when you enter here, your stop maybe is like here, okay? But when you enter again, your stop needs to move here, okay? Because you are adding, but you do not want to risk more than that, okay? So basically you are adding another contract so you can have bigger profits. Your stop loss need to be the same. So you need to take that stop and put it a little bit higher. All right, remember that, because this is very important in this kind of management. Okay, because it's not a classic averaging down where you add but the position remain the same. Okay, yes, you are adding, but you are making your stop more strict. Okay, so you cannot do these always, of course. There are situations, a lot of them, where you can do this. Okay, so when you have a strong setup and you have a little retracement that can give you this possibility. Okay, so this is very important. Another tip that I can give you, and I think this is a problem of a lot of people, is about the risk reward. So there is I think a toxic narrative that you need to go above, or better, you have to go not below 1 to 3 risk reward. I think this is a little BS, because people think that if you have a good risk reward, that means that you will always gain more money than what you risk. But it's not really like that, because yes, when you take profit, full profit, of course, you will get 3 risking 1, but a lot of time you will be stopped out. Okay, so the risk reward is strictly correlated with win rate. What nobody says is that having a huge risk reward is pretty difficult, but having an high win rate, it's much more easier. Right? Because if you have a strong edge, or if you have a good strategy, having a good win rate taking only A plus setup, it's not that difficult. It's much more easy than take 1, 2, 3. So the best thing you can do, it's aiming for a 1-to-1 risk reward, but a 60% win rate, even 55%. It's good, basically. Okay, so if you try to do this kind of things, you can have great results and will be easy. The thing is that it's not sexy looking for 1-to-1 risk reward, right? But the thing is, you are looking for what is sexy or for what it works. I think it's better to do what works. Okay, so you saw my numbers, and basically these make sense, make everything easier to manage. Okay, so now let's see the strategy. So regarding the strategy, it's pretty easy. So I use a TPO chart. So why is that? Why is very useful, the TPO chart? Because it gives you a bias. All right, we can easily look here and see that we have a downtrend that's got broken, and now we are going up. Okay, so all these bells that you see here, these are single days. When you see these big bells with this area, these are just multiple days. All right, so I always try to stay above the last day if I want to go long, or below these days if I want to go short. Right, in this case we are above the last composite day, so multiple days merged together. If you want to look it better, I can go here and do undo all merges, and you can see these are 3 days. Okay, so in this case I have them merged because are in the same area. All right, if you don't know how to use the TPO, you can just type something in the comment and I will do video about that. But anyway, this TPO, what is giving me a bias, basically a map, right, is saying to me to go long or to go short, or to look for longs and look for shorts. The other thing, I go here and I look at a chart. Basically, it's a daily chart, and this is very useful, this kind of daily chart, because here I can see a couple of things, interesting things. The first one, these areas I have on the TPO chart. Okay, so in this case, this area, okay, so I can use basically this area as target points. Okay, and the second thing is a VWAP. So this is a VWAP with second standard deviation here, and basically this second standard deviation and these points of these areas are targets for me. Okay, indication where the market can go. If you don't know how to use a VWAP, type it in the comment and I will do a video about it. But basically it's a statistical indicator, we can say indicator, but it's just not an indicator. It's statistical representation of the market. Now I know I want to go long because I'm above this area, so I want to go long. I know that. The second thing that I see is if we are above or below the VWAP. Okay, so this is very important for me. In this case, I'm long on the TPO, so I want to look for longs. I'm above the VWAP, so I'm even here I'm long, okay? I want to go. The other thing that I want to see is that the market struggle to break this VWAP, even if it's a little bit higher than the VWAP, but I want to see the market that it's struggling to go below, okay? And the other thing that I want to see is this one, this number that you see here. These are big trades, okay? Big trades or large trades. It depends on your platform, okay? But basically, in a way or in another way, this indicator shows you the levels where big players are pushing orders. In this case, I was looking at a lot of buyers that were trying to push, pull back. They continued to push, pull back. Sellers got stuck there. Okay, so of course, new buyers came here to push the market, and this seller exited from the position. So basically, when a seller exit from the position, what he does, he buy, because if you exit from a sell position, is like if you are buying, you will get other people, you will get other pressure buying this market. So of course I entered here, and look, I entered even here, like I said you before. And the first scale was here near the previous high. The second scale was here, and the third scale here on the second standard deviation, okay? Because if you see here, this is a second standard deviation. And the final scale was here near this point that for me is very, very important, okay? So this is the strategy that I use day in and day out. If you wanna go deeper in this strategy, this is very, very simple, guys. Can seems hard, but it's not. It's very, very easy to understand. So if you want to go deeper, just type something in the comment. So maybe I'll give you an in-depth video about this strategy. This is basically the exact strategy make me doing these kind of returns that I think are very, very interesting. Okay, this is the day of today. So we have 297 profit, and on the platform we have 305 because you have to calculate the commission that I'm paying. So this is not a net profit. I hope everything is clear. If you have other question, just type something in the comment, and we'll see you in another video.